Something very unusual is happening to XRP right now, and most people haven't even noticed it. According to new reports and market data, the XRP liquidity on Binance has reportedly dropped to near zero levels, something we haven't seen for a very, very long time. Now, depending on who you ask, this is either an incredibly bullish setup or it's a major warning sign. Because when liquidity disappears from a market, things can get very dangerous very quickly. And the reason this matters is simple. Liquidity is one of the hidden forces that controls price movement in financial markets. Most retail investors spend all day staring at candles, but professional traders are often looking underneath the surface at things like order books, liquidity depth, market participation, and where the real supply and demand actually sits. And right now, something strange appears to be happening with XRP. So today, we're going to break it down, what liquidity actually means, why XRP traders are paying attention to this, and why some people think this could trigger a major move, and why others think it's a warning sign, and what this could mean for XRP going forward. Because whether you're bullish or bearish, you need to understand what's happening here with this statistic. Before we get into it, a huge thank you because we've now officially broken through the 10,000 subscribers on this channel, which honestly is absolutely crazy when you think where we started. So thank you to every single one of you that watches, comments, supports the channel and shares the videos. Now, let's see if we can smash it through our next target of 11,000 subscribers as quickly as possible. So if you enjoy balanced crypto content without all the nonsense moonboy hype, hit that subscribe button and come and join us on this journey. Right, let's get into this XRP liquidity story because this is genuinely fascinating.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
Before everybody starts screaming that XRP is about to go to the moon tomorrow, let's slow things down and explain liquidity properly in beginner-friendly language. Liquidity is basically how easy it is to buy or sell something without massively affecting the price. Think about trying to sell a bottle of water at a football stadium during half time. There are thousands of buyers everywhere. You can sell instantly. That is high liquidity. Now imagine trying to sell a rare antique item in a tiny village where nobody is interested. You might struggle to find a buyer at all. That is low liquidity. Financial markets work exactly the same. In crypto, liquidity is heavily connected to the number of buyers and sellers sitting on the order books. If there are massive buy and sell walls everywhere, the market can absorb pressure fairly smoothly. But if the order books become thin, even relatively small trades can suddenly move price aggressively. And this is where things start to get a little bit interesting for me when it comes to XRP, because if liquidity genuinely is drying up, then XRP could become much more volatile in either direction. And this is one of the most misunderstood things in crypto. A lot of people think huge price moves only happen because millions of new buyers suddenly enter the market. But sometimes massive price movements happen because there simply aren't enough sellers available. And that is an important distinction when you're looking at these stats. Imagine there are only a few houses available for sale in an area and suddenly loads of people want to move there. Prices explode upwards. Not necessarily because the demand is infinite or it's huge, but because supply is limited. Crypto can behave exactly the same way. Now, if exchange liquidity dries up and people stop selling, then even moderate buying pressure can suddenly create violent upwards movement. This is why people use phrases like liquidity squeeze, supply shock, or thin order books. And historically, XRP has sometimes been known for long periods of boredom, followed by explosive movements in short time frames. That's why people are watching this story so closely right now. So according to the reports, I'm going to put a chart on the screen here. XRP's 30-day liquidity index on Binance has reportedly fallen close to levels not seen since around 2019. Now we should be careful here because crypto social media loves exaggeration. And whether you hear phrases like near zero or collapse, you should always take a step back and avoid emotional reactions. But regardless of the exact metric being used, these are definitely signs that the market participation is thinner than during previous hype periods. Trading volume across crypto is lower than peak mania phases and retail excitement is lower. We know that. Just go to social media, go to TikTok, go to YouTube, look in the comments. People's excitement has flattened. The easy money environment that flooded markets a few years ago or even back in the summer no longer exists. And many traders are sitting on the sidelines waiting for clearer direction. So even though some headlines are dramatic that you're probably seeing on X right now, the underlying conversation about liquidity is actually legitimate. The question becomes, why is liquidity drying up? What happens next? And for me, that's the most important question. Now let's talk about why XRP bulls are getting excited about this liquidity drying up. Because from a bullish perspective, this could potentially become very, very interesting. The bullish thesis is based around the idea of reduced sell pressure. If fewer XRP holders are willing to sell and fewer coins are sitting on exchanges ready to be dumped, then it takes less buying pressure to move the price upwards. And this becomes especially important if some kind of major catalyst appears. For example, the Clarity Act, ETF speculation, positive regulatory developments, institutional adoption, any of those that we all know and love. Because if demand suddenly enters the market while liquidity is extremely thin, prices can move violently to the upside. This is why some traders actually get excited when markets become quiet. And I'm one of these people because often the biggest moves come after long periods of boredom. Now, I talk about this all the time, but it's true. It happens. And XRP holders will tell you this has happened before. Historically, XRP has had periods where people completely lose interest. Then suddenly the market wakes up, the price moves aggressively within a very short time period. Now, obviously, history doesn't guarantee anything, but you can understand why the bulls are paying attention right now. And XRP is actually a very unique asset psychologically. Whether you love XRP or you hate it, one thing you cannot deny is the XRP community is incredibly resilient. This is a community that survived lawsuits, exchange delistings, endless media attacks, years of sideways movement, and constant criticism from the wider crypto space. Yet despite all of that, the community stays active, and that matters because markets are emotional, narratives matter, and beliefs, they do matter when it comes to narratives. And XRP still has one of those strongest long-term holder communities in crypto. We've made videos on this in the past about how many people into XRP are holding their coins off the exchanges and on cold storage wallets. So when suddenly liquidity starts drying up, some XRP holders interpret that as conviction. They believe people are no longer interested in selling at current prices. And whether that belief proves correct or not, it absolutely influences market psychology. But now we need to balance this properly because low liquidity is not automatically bullish. In fact, sometimes low liquidity can be a warning sign because liquidity doesn't only disappear when holders become ultra bullish. Liquidity can also disappear when markets become exhausted, when traders lose interest, when participation drops, and when speculation fades. And also, this is where the bearish argument comes in. Bearish analysis would argue that thin liquidity simply reflects weaker market participation overall. Less excitement, less retail engagement, less capital flowing into the market. And here is the important part. Thin liquidity cuts both ways. Yes, it can create aggressive pumps, but it can also create brutal crashes. If one large whale decides to sell on a thin order book, price can drop incredibly fast because there aren't enough buyers underneath to absorb the pressure. That's why professional traders often become cautious in low liquidity environments because volatility increases massively in both directions. And honestly, part of the reason this conversation is getting attention on X is because the wider crypto market is in a strange place right now. There's uncertainty everywhere. You've got global economics concerns, interest rate uncertainty, regulation debates, ETF narratives, geopolitical tensions, and investors constantly trying to figure out whether crypto is entering another major expansion phase or whether markets need another reset first. And at the same time, there's also a massive long-term optimism underneath the surface. Institutional adoption keeps growing. Bitcoin ETFs change the landscape. Major financial firms are taking crypto more seriously than ever before. And XRP specifically continues pushing the narrative around payments, banking infrastructure, and institutional utility. So the market feels caught between fear and optimism. And when markets enter these uncertain periods, liquidity often dries up while everybody waits for the next major catalyst. So now the obvious question becomes this: what could actually trigger the next big move for XRP? Well, there are several possibilities. You've got the regulation clarity when you're looking at the Clarity Act. You've got the potential ETF developments in the future. You've got broader Bitcoin momentum potentially dragging the altcoin market upwards. You've got Ripple continuing to expand internationally. And you've got the possibility of institutions becoming more comfortable entering crypto markets over time. Now, I'm not saying all of those things suddenly happen tomorrow, but markets move on narratives. And if strong narratives collide with extremely thin liquidity, that combination can create explosive environments very, very quickly. That's why this story matters so much, not because low liquidity guarantees an upside, but because it creates conditions where large moves become more possible and more likely. And honestly, I think the biggest lesson from all of this is something retail investors often forget. Markets are not just about price. They're about structure, psychology, positioning, and about liquidity. Most people only start paying attention after massive moves have already happened. But often, the real signals appear underneath the surface first. But does that mean XRP is definitely about to explode? No, absolutely not. Anybody guaranteeing outcomes in crypto is talking absolute nonsense. But I do think this is a genuinely interesting development worth paying attention to, because when liquidity becomes extremely thin, markets rarely stay quiet forever. So now I want to hear from you guys. Do you think this XRP liquidity situation is massively bullish, or do you think it's actually a warning sign that the market participation is fading? Drop your thoughts down below, because I think this is one of the most interesting XRP discussions we've had in quite a while. And if you enjoy balanced crypto content without all the ridiculous moonboy hype, make sure you subscribe, because we've got some massive content coming to this channel. And speaking of massive, this Friday at 7 p.m. on the UK Crypto Podcast, we have the former global vice president of Binance joining us in the studio. And trust me, this is the one that you are not going to want to miss. The podcast is now starting to attract some serious major guests. And honestly, once this episode is done, you guys are not going to believe some of the names we've got lined up over the next few months. The levels of guests we're now speaking to is absolutely crazy. So make sure you subscribe, turn on the notifications, and I'll see you probably next Friday, 7 p.m. for the UK Crypto Podcast on this channel. I'll see you on the next one. And remember this, the strength of the wolf is in the pack.